Hey everyone, it's Jeff Trapp here with the Jeff Trapp podcast and the Tax Planning Pros. And I'm so glad that you've decided to join me today. Wow. The first 30 plus days or so of the Trump administration has been really, really crazy. And, we've got lots of announcements from a tax and financial standpoint. So today we're just going to jump right into it and recap some of the items we talked about last time because we've had changes since then. So it's really been really, really fun and exciting to see what is going on out in the world of tax and finances. So a couple updates for you, right? We've got a couple of deadlines coming up. We've got our corporate income tax deadline or pass through income tax deadline for S corporations and partnerships on March 15th. So that's just a few weeks away. So make sure you get those taxes filed. There are stiff penalties for not filing those returns on time, especially for shareholders and for partners. Now, those returns can be extended. There's no tax due typically with those returns. So those tax returns can be extended for up to 6 months. Now, on April 15th, you've got your personal taxes and your C corporation tax returns due. Those tax returns can be extended for up to 6 months. Unfortunately, that does not extend the time to pay your taxes, only the time to file. So if you typically owe taxes or you know that you'll owe taxes this year, make sure you get an extension payment made so that you don't have to pay, tons of penalties, tons of interest when it comes to those taxes. Now, I know we talked about this last month and, the beneficial owner information report continues to boomerang back to us. That was struck down, as not being unconstitutional last week. And so those reports need to be filed by March 21st, 2025. So if you have a business entity that you formed in 2024, 2025, or any year prior to that, that is still active, then you need to file that report because there are stiff penalties, there are stiff fines up to $591 per day and up to 2 years in prison. So I don't want to see anybody go to prison over a reporting or compliance form where you're not even declaring income or anything like that. So get those forms in. We've been advising our clients, even with the pause, to continue to file that information and do it correctly. Now, today, what I want to talk to you about is some fun things, right? We've got the Trump tax proposals. Catherine Levitt, a couple of weeks ago, came out and said, this is what the administration is going to focus on the first 100 days. So I'm going to run through each of these items here. And you know what? I'm going to give you a little bit of my opinion, whether or not I think these things are going to pass or what needs to happen in order for these things to pass and how that will affect you. So this is fun. So the first thing she announced is no taxes on tips. Well, that'd be pretty awesome, especially for our service workers, our restaurant and hospitality industry. Super, super huge, right? No taxes on tips. So that would be a really, really awesome thing to see happen. I know those folks work super, super hard. But, unfortunately, in reality, in order for this to happen, you know, they're going to have to find some extra money. And that's, where the Department of Government Efficiency comes in. They're finding all of this extra money. What are they going to do with it? Are they going to pay down debt? Are they going to funnel it to these tax programs? How is that all going to work? We just don't know. There's not enough information out there. So as of today, no taxes on tips would increase inflation tremendously. And therefore, I do not see this passing, in the next 100 days or, probably in the Trump administration, unless something drastically changes where there is, a lot of found money. And I know they're finding money every single day. Now, the next item here is no tax on Social Security for seniors. Same thing. I do really think that this is a great proposal, right? But, unfortunately, I do think it has a low probability of passing because once again, Social Security is supposed to go bankrupt by 2034. I know there have been found some folks on the Social Security roll still cashing checks that may have passed away, right? And that's going to get all cleaned up, which I think is a good thing. And there'll be some extra money there. But what does that extend Social Security to 2035, 2036? So if you're not collecting tax on this money, you know, I think you're going to have an inflationary issue or you're going to have a funding issue down the road. Now, I'd love to see it pass and see it happen, see more benefits for Americans. I just, don't think it has a very low probability of passing at this point. Now, don't get me wrong. When I talk about these things, I could be wrong. These are just Jeff Trapp's opinion. What I know about the economy, what I know about the data that's out there doesn't mean that it's gospel or going to happen. So just keep that in mind. The next item here is no taxes on overtime pay. So if you are somebody who collects an hourly wage who works overtime, they're stating, hey, you don't have to pay tax on that money because you're working hard. You're out there, not collecting welfare. We want to give you a benefit for your hard work. And, I think this would be really, really great. We've got a lot of hard workers out here in America. And, you know, they should benefit from being hard workers and not, you know, relying on the government system. However, you run into some of the same similar issues that you have with no tax on tips and Social Security. Where are we going to find this money? And can we get everybody on board to actually vote for this and go for this? So I think there's a very low probability there. Now, the next item is the Trump tax cuts are set to expire at the end of this year. And there is really, I feel like, bipartisan support to extend the Trump era tax cuts from 2017. And I do think that's a high probability that we'll see those tax cuts extended. That would extend our estate tax limits, which is huge for people that have, larger estates and things like that. And, I'm excited to see, hopefully maybe 100% bonus depreciation come back. Now, I don't know if that's going to be in effect as of this year or go into effect when they actually do expire. And as you know, bonus depreciation this year is only at 40%. But I do think this has a very, very high likelihood of getting extended and passing. Another item, because of the Trump era tax cuts, there was a $10,000 cap on state and local income taxes, think property taxes, your real estate taxes, right? It's capped at $10,000. A lot of states that have high property tax values were mad. And so they created loopholes for you to get that tax credit on your state tax return, but it didn't really affect you on your federal taxes. So they're talking about making these limits higher. And there is bipartisan support for this issue. Now, I don't think it's going to be a huge amount. I don't think we're going to go from 10,000 to 50,000 or anything like that, but I could definitely see them maybe doubling or even tripling that amount. And that would really take care of the real estate taxes people pay. And I don't think they're looking to really help out those folks that pay a lot in state income taxes. They want to make that more of a state's issue. But I do think this is something that is going to get adjusted. I do think this is something that is going to pass with all of the bipartisan support. And so how do they pay for some of that, right? So the next thing is eliminating special tax breaks for billionaire sports owners and hedge fund owners, billionaire hedge fund owners, by limiting their middle class tax cuts. Now, I don't know if this has bipartisan support, and so that's going to be a big thing. But I do think eliminating some of these tax breaks could help pay for the other items and maybe bring those to fruition. I just don't know enough about this to say whether or not this is going to happen. But if I'm going to err on the side of caution and say probably not, but I've got to get some more information there. And then tax cuts for made in America products. And I think this could really come to fruition from the tariff scenario, the tariff situation, right? I think the tariffs could help pay for some of that, the tax cuts for made in America products. So I'm going to say that maybe has like a medium 50% chance of passing, and we'll kind of see where that goes. Now, over the last few days, last week or so, the Department of Government Efficiency has found a lot of money, a lot of government overspending in areas that maybe we didn't need to overspend it. And they're talking about utilizing the additional money, which they found that 50%, I believe, would go to paying down debt plus $5,000 going to every taxpayer in America. They would be these Doge dividend payments. And that's a really, really interesting concept. And I think if we can get bipartisan support, I think that is something that can actually happen. But right now, I'm just going to put it at a 50% because there's still not enough information of how that's going to come to fruition and actually happen. So a lot's happening in the world of taxes, in the world of finances, in the world of budgeting, and what the government is doing and what the Trump administration is doing. And it'll be really, really interesting to see what happens. And as we know here at the Jeff Trapp podcast, we're going to keep you apprised of everything that's going on throughout 2025, because I think you're going to see a lot of movement and shaking when it comes to taxes, financing, and budgeting. And I know with a lot of these cuts and these things they're doing to pay down the debt, the goal is to at least pay it down by $1 trillion. If they're able to do that, that eases pressure on those treasury yields. And, that would ease, mortgage interest rates and kind of get the economy jump started. And, you're probably not going to see a huge effect on the mortgage interest rate side until 2026. But I know that's top of mind for this administration. So it'll be interesting to see what happens. And, it's important as you go throughout this process and go throughout this tax year. I do not think the IRS is going to get eliminated or abolished, even though there's been some layoffs and different things at the IRS. They're still working hard to process tax returns, making sure that people pay their fair share to keep revenue generated. We've got to figure out a way to bring in revenue, right? And so, you're going to need to make sure that you're speaking with your tax strategist throughout the year to stay updated on these laws, but also paying the least amount of tax possible and taking advantage of the loopholes that might be able to be found in these laws, the legal loopholes. A lot of people, think loophole is a bad word, but if they're legal, then that's okay. And that's what we're here to do, is find those legal loopholes to help you pay the least amount of tax possible. So I'm Jeff Trapp with the Jeff Trapp podcast and the Tax Planning Pros. If you're looking for a tax strategist for this year to pay the least amount of tax possible, you can go ahead and book a call with our team below. And we'll be back next month to discuss, what else is going on in the world of tax, finances, budgeting, and our government and all the crazy things that they're doing. So look forward to chatting with you again soon, and have a great day.